Hey everyone, it's Ankit. Welcome to a brand new video. Today I want to talk about Evergrande, the debt crisis we're in, stock market, and the red flags I'm seeing with everything that's going on. If you're excited about today's video, then drop a like and subscribe. Let's try to hit 7,000 subscribers. Let me know in the comments below, should we be worried or not, and why? And what are your thoughts and opinions about Evergrande? With all that out of the way, let's get into today's video about Evergrande and everything else. Thank you. If you guys heard the news or not, but as of yesterday, everything was down. The Dow was down, S&P was down, crypto was down, the stock market was down. Everything was down and everything was in red. If we keep getting more days like this, like we had on Monday, we will be in for great correction mode. Today I want to do a video about Evergrande. They're right now buying and selling its properties to make up for the debt, but right now nobody wants it. And what are the implications for the global markets to the Evergrande crisis, and what it could mean for you and me and everyone else? This Thursday, $84 million in interest is due in payment for Evergrande, and it could default, unless someone tries to bail them out. So here's an amazing article I found and one of my friends shared with me. Biden administration warns states federal debt crisis might trigger recession. The Biden administration has issued a warning that the pending federal debt crisis might trigger an economic recession that would affect economic growth and trigger job loss across the United States. Hitting the debt ceiling could cause a recession. Economic growth would falter, unemployment would rise, and the labor market could lose millions of jobs. The U.S. economy has just begun to recover from the you-know-what, and a manufactured debt ceiling crisis would threaten the gains we made in the future recovery. Global debt hits record $296 trillion as world lockdowns ease. The amount of world's outstanding debt swelled during the 3 months by $4.8 trillion to a record $296 trillion, according to the Institute of International Finance. The global debt rose to a record high during the second quarter of the year. If you look at this graph, you can see how much it's increased. That is a ridiculous amount. The increase was led by households that added 1.5 trillion of debt during the first half of the year, driven by the US, China, and Brazil. A lot of people are probably wondering, how can something from China make the market crash? Well, we already know that it's already happened once. And it will probably happen again. Like, history repeats itself. It's nothing new. Like, for example, what happened a while ago. I can't say that word on YouTube, so I'm not gonna say it. So some of you might be asking, what is Evergrande? What is Evergrande Group? What do they do? What is the company about? Evergrande Group, or Evergrande Company, is a property developer company. In 2018 was the largest, most valuable real estate company in the world. Now it's the second largest property developer by sales, and the 122nd largest group in the world by revenue. It employs about 200,000 plus people in China. It is important because it helps create jobs for the people in China. The company has built more than 1,300 housing developments in 280 cities in China, with the plans for another 3,000 projects. But with all of this debt now, who knows what's going to happen or what the plan is now, because we don't know, how they're going to pay off this debt. In just a few minutes, I'm going to tell you what the sad part is about this whole thing. They have been creating so much debt, instead of solving the issue and paying back the debt. They should have been focusing on that as their core value for the company, and renting out these properties or doing something with these properties to pay back the people that took out loans, or the people they're borrowing money from. And this sounds very familiar to something else. This is probably going to be a bigger problem and a longer problem than most people think it is. And here's Evergrande's financial woes. 305 billion debt, 7.5 billion bonds due in 2022, 75% haircut likely for bondholders, 1.5 million unfinished properties, 85% share price drop, new homes offered with 25% off. Also, you have the car issue, where they have invested in an electric car company, Hengqi, and they have 0 cars made. Like, what was this company doing this whole time? What were the head people doing? How do you have all these properties and not done something with it? Why is everyone panicking? Well, Evergrande suddenly stopped paying back thousands of employees who have loaned money to the company, and right now they're protesting about it. And in a regulatory filing on September 14th, the company said it was having trouble finding buyers for some of its assets and had brought on financial advisors to help assess the situation. Evergrande's shares had tumbled 80%. Evergrande's due to the complexity of its business structure and the lack of sufficient information on the company's assets and liabilities. Evergrande does not only have property issues, debt issues, but they also have a car issue. Electric car struggles are yet another problem for Evergrande. So they were in works of making an EV car with Hengqi, an EV company in China, and they haven't developed any cars. They have developed 0 cars, and Evergrande warned investors last week that it had made no material progress, even after pouring about 50 billion yen, 7.7 billion, into car development. Evergrande New Energy Vehicle Group has encountered repeated setbacks. The firm has said last month it may have to delay the start of manufacturing again, which they haven't even started. So how are you going to delay something that you haven't even started? No wonder they're in debt, because default expectations for China Evergrande rise as payments deadlines looms. So they have until Thursday for the 85 million in interest payments that they're due on Thursday. And I think they're probably going to default on that, like I said earlier. So here's the sad part about this whole thing. Evergrande gave workers a choice: lend us cash or lose your bonus. The Chinese property giant owes 300 billion, is on the hook for as many as 1.6 million apartments. It may owe tens of thousands of its employees money too. Evergrande suddenly, stopped paying back thousands of employees who gave them money for these properties. They have been creating debt instead of solving the issues and paying and then, you know, trying to pay back everyone that they borrow money from. They should have focused on that as their core business. And this sounds very familiar to something else. Evergrande suddenly stopped paying back thousands of employees who had loaned or lent them money for the company. Now if you scroll down, look at their faces. This is sad. And now protests has taken place at their locations in China. And Evergrande did not respond to a request for the comment, but the company recently warned that it was under tremendous financial pressure, you know. And you have banks and investors happily throwing their money, making a bet or a gamble at this company, and making a bet on Chinese growing middle class and its appetite for homes and other properties, and hoping it would turn into something bigger. And this is why investors should be worried, you know. Let's look at the top mutual fund holders that hold Evergrande. And, you know, as you can see, you have all these that hold Evergrande. What it's going to do to their portfolio, what it's going to do to the people that own these mutual funds. Like, I hate when people are talking about buy the dip. Right now there is no dip. Everything is overvalued, or almost everything. When you're trying to buy stocks, you're trying to buy them at a discount. You're not trying to overpay for it. Right now you have the Fed, you know, propping up the market. I'm still waiting for like a real dip. Valuations right now are just horrible. They are trading at a high PE, trading in the futures, like way in the futures, and then you, like I said, you have a lot of money printing going on. So right now I'm not looking to overpay and compete with the Fed on buying these stocks. Almost, if not every stock, is trading really high. There's still inflation concerns. Now we're also in a debt crisis concern. And, you know, you should always be asking yourself, why is Warren Buffett sitting on so much cash right now? And if you don't know the reason, if you don't know the answer, then you should do your research. But he's sitting on a whole bunch of cash because he's waiting for the market to crash. And when it does, he's going to use that money to buy a whole bunch of stocks, and stocks that he knows about. If I were you, I would, you know, do the same. I would make a list of stocks that I want to purchase or buy, and then have a good entry point. Wait for a good valuation. And you should always have like cash ready on your account for whenever the market does crash, so you can be ready to go when there's a real dip. If I were you, I would do the same as Warren Buffett. Keep cash on your account and have it ready to go for when a real dip comes. How much more do you think these stocks will run up? And how much longer? There is not that many good deals. That's why, you know, I'm holding on so much cash and I'm not investing right now. So I'm waiting for the real deals, you know. I don't want to be 100% in with all these crazy evaluations, inflation, debt crisis, the money printing, the price of everything going up, even gas prices going up right now. So that's why I'm working on a shopping list for when it does dip, and when it does happen, I have that list, and I can go to that list and be like, oh, I'm gonna go buy these stocks because I already done my research on them. And like I said earlier, wait for a good valuation and a price you want to enter in. So everyone, you know, go out there and make your list. And I'm curious on what's going to be on your list. If you want to let me know in the comments below, let me know. And this is why Beijing is cracking down. The Chinese government has recognized that the past practices were unsustainable. For years, large money losing Chinese companies have been kept afloat by waves of loans. And now they're cracking down on everyone, making sure that doesn't happen, because they don't want to be in the news for this kind of stuff. They're already in the news for other stuff, but China has a serious zombie problem, and I'm not talking about The Walking Dead or They actually have like a zombie problem. The Chinese economy has been suffering from excess non-financial corporate debt for a long time. As a result, China has a serious zombie problem across the country. There are probably tens of thousands of zombie firms that are persistently making losses but kept alive only by continuously bank credits and government subsidies. Excessive non-financial corporate debt may pose a threat to stability of the broader financial system. Even the bankers are getting nervous, as you can see. Difficult balancing act